What is a stock exchange? When you buy a share, you're buying a small piece of a company. A stock exchange is a place, either physical or digital, where people buy and sell those shares. It's like a giant marketplace for investments where businesses can raise money and investors can trade ownership in those businesses. You might have heard of the London Stock Exchange or the New York Stock Exchange. These are some of the biggest and busiest in the world. Why does it matter? Stock exchanges are important because they help businesses grow and give people the chance to invest. When a company lists its shares on an exchange, it can raise money to build new products, hire staff, or expand into new markets. For everyday people, stock exchanges provide a way to own a piece of a company, even with a small amount of money. It makes investing accessible and more organized. There are rules in place to help protect buyers and sellers. Here's a simple example. A defense company called X-Arm plc wants to grow, so it lists its shares on the London Stock Exchange and offers each share for £1. If you buy 100 shares, you've spent £100 and now own a small part of the company. If other investors think X-Arm plc is doing well, the price of the shares might go up. You could then go back to the exchange to sell your shares for a profit, or keep them if you expect the price to rise even more. Share prices change based on supply and demand. When more people want to buy, prices usually go up. When more people want to sell, prices often drop. The stock exchange facilitates the buying and selling of the shares. What else should you know? You don't buy shares directly from the exchange itself. Instead, you use an investing platform or broker that connects you to the exchange. Some platforms charge fees, so it's worth comparing before you start. Also, not every company is listed on a stock exchange, only those that meet certain requirements and decide to go public. And while stock exchanges are well regulated, investing still comes with risks. Prices can go up and down based on news, performance, or even rumours. While most people use stock exchanges to buy shares, some exchanges also let you trade other things, like bonds or funds. Different countries have their own exchanges, and some companies are listed on more than one. To sum it all up, a stock exchange is where shares in companies are bought and sold. It connects businesses looking to raise money with investors looking to grow their money. Prices change with supply and demand, and different exchanges exist around the world. It might sound complicated at first, but it's really just a well-organized marketplace for investing. Thanks for watching this video. Not sure where to go from here? You don't need another video, you need a plan. Grab the free 5-day series below and start investing with confidence. The link's right here on screen and in the description. Don't miss out.